What's up, my Mind Your Money business folks? It's me yet again with another video on Friday's stock market news. And as always, hopefully you're in the market and not trying to time the market, because that is simply impossible to do. And hopefully you're still not straddling the fence and you are at least investing into yourselves. Start investing into appreciating assets. And again, that includes yourself. That appreciates over time. That's gaining more knowledge. That's gaining more value. So I did not post a video on Friday, nor did I do it on Saturday. I was thinking about not even doing it at all. I just wanted to take a break. Actually, I was just lazy. So I'm doing it today. And yeah, it is what it is. I'm happy to say that I am doing it. So hopefully you guys are doing great. You're enjoying your weekend. So it says here, for Friday, the Dow, S&P 500, Nasdaq bounced, but in turbulent week with sharp losses. Yeah, the market has taken a big hit. There's just a lot of uncertainty surrounding the market right now. The AI bubble, interest rates. Yeah, there's a lot happening. So it says U.S. stocks climbed on Friday to close a turbulent session in the green amid rising optimism for a December interest rate cut, while Bitcoin kept tumbling amid a brutal stretch for cryptocurrencies. Now let me see what Bitcoin is at, because I remember Bitcoin was at like $126,000, and people were talking about it going up to $200,000. Oh, Bitcoin has dropped to $87,000. Wow, that's a big drop. So everything is taking a hit. So it says the tech-heavy Nasdaq Composite and benchmark S&P 500 closed the day upright against, around 0.9% and 1% respectively, after seesawing back and forth earlier in the day. The Dow gained 1.1%. So U.S. equities perked up Friday after the New York Fed President John Williams said he sees room for a cut in the near term. That led rate cut bets for the Fed's next meeting to spike, with traders pricing in 75% odds of a December cut, up from around 40% on Thursday. Williams' remarks come amid evidence of a deeply divided Fed heading into its final meeting of 2025. Remember, interest rates, it affects the market. It affects how people buy things, how businesses apply for loans, because a lot of them use loans to finance the business. And who wants to finance these business loans, mortgages, car loans at a high interest rate? So when rates are high, people borrow money a lot less, and that affects the market. That means a lot of money is not pouring into the market. So if you're not buying things, how can the stock market go up? So that's why there's talks of this $2,000 check that may come out, the stimulus check. Because what the government knows, when you give people free money, they're going to spend it. And where are you going to spend it? Not on yourselves. You're not going to invest. You're going to spend it on goods and services. And what are those goods and services going to do? Take the money. And those goods and services are on the stock market. Starbucks, Johnson & Johnson, Best Buy, Home Depot, Walmart, Amazon, Meta. Yeah. Apple products. People are going to spend the money. And so, they say it doesn't matter if the richest give their money out, it will always come back to them. Because when you give it away to people, when you give away free stuff, what I've noticed, especially from my experience, people don't value it as much. They don't value that car that they didn't work for. They don't value the money that was freely given to them. Like these stimulus checks, and you need to understand, Where, like the last stimulus checks when they were printing out all this money, where did the money come from? No one worked for that money that you're being given for free. So what happens? The prices of goods continue to go up. Your taxes continue to go up because when you print out money like that and you give it away for free, it adds on to your debt, not your personal debt, but the country or the government, well, the country's debt. And you have to pay back that debt. I was looking at Robinhood. And I remember when the sheriff of Nottingham, and he was talking to the Catholic priest, and he said, we need to come up with a bounty, a big enough bounty to make people go out and hunt to catch Robin Hood. And so the priest asked the sheriff at the time, how are we going to pay this money back? He said, we will tax the people. Not pay this money back. How will we get our money back? Because he was asking the priest to put in half. He was going to put in half, and he was going to ask some other lords, surrounding lords, to also put up some money. How are you going to get the money back? The priest asked. We will tax the people. We will raise the taxes. That's how you get the money back. Like this money that's being given away to different countries for different things. You're being told that the money's being given away, but no one asks any questions. You don't say anything to the politicians that you're voting for on where is all this free money coming from and who's going to pay it back. You are. That's why taxes will continue to go up. The price of goods and services will continue to go up. America is in $38 trillion worth of debt. Then American people are in $18 trillion worth of debt. So it's not going to, the math is not mathing. So something's coming. And most people, I believe, are not aware or prepared for what's to come. I don't know what it is. But all of this debt that the country's in, there's going to have to be a reset. And when that reset comes, it's going to affect a lot of people who are not prepared, who don't have their house in order, who don't have money saved or invested. That's what I sense. I could be wrong because I don't know. But what I do know is having a lot of debt does not look good. It does not feel good. And someone has to pay it off. Like Dave Ramsey says, when you are in debt, you are a slave to the lender. So what if you have all of this debt, you have no job because technology is taking it over? How are you going to live in this system that we currently live in this ecosystem that we currently live in, that revolves around you being able to provide for yourselves and for your family? And it takes money. Rather the dollar loses its core value, rather we go to digital currencies like Bitcoin. How are you going to obtain that thing that's considered value if you don't have the job or the means to earn it? If you haven't invested and you've allowed your money to grow and grow and grow, if you're not creating assets, if you're not an owner of things, if you're not a business owner, if you're not providing anything other than you're just a good person. Being a good person is not going to pay your bills. So I just wish people would just wake up. Things are the way that they are. They're not wrong. They're not right. They just are. It's all about how you choose to observe and look at what's happening. And then make a decision. You need to start preparing yourself. You need to start taking care of yourself. You need to start minding your business. What do I need to do for me in mind in order to prepare for the future? Whether it's good or whether it's bad, I'm going to be okay. How can you get to that place is what I think people need to start figuring out. And they need to start figuring out quickly, because things are changing even faster and faster. And it's only going to get faster and quicker as people continue to get smarter, technology continues to advance, it's gonna be like an Arnold Schwarzenegger movie. I believe they give us versions because they just know, whoever they are, right? They just know what things are going to look like, and they tell us in the form of movies, TV, but we look at it as pure entertainment. But I always look at things differently. I'm just different. There's certain things that I like watching on TV because, well, not TV because I don't watch a lot of TV, but I will watch like a movie, or I will watch a TV show, but I don't watch it like during regular TV hours. I will watch it like the Netflix stuff, or the Disney. I was about to say something, but I can't say that. Either way, Amazon Prime. So there's only certain types of shows that I like to watch. For some reason, I'm drawn to certain shows. And then when I watch those shows, this is just me, I'm not saying everyone's the same way, I say, there's some truth to that. There's certain types of movies that I like to watch. I'm like, I just have like this, it's like a spirit of discernment. There's some truth to that. And I believe like they have to put the truth out there. Even watch The Simpsons, where before Donald Trump was president, there was a Simpson episode where Donald Trump was president. It was funny because how is that possible? There was also a Simpson episode. There's been a lot of things that have come to pass that were in the form of movies and entertainment, but people only see it as entertainment and they don't see the truth in it. So when it happens, they're not prepared. And that's why I believe, and in my opinion, you can easily manipulate and control people when they're unaware. Yeah, I know I just got off on a tangent. Anywho, but Friday's gain failed to undo a losing week for stocks amid mounting concerns over an AI-fueled bubble. Not even Nvidia and its CEO Jensen Huang could ally those fears after the AI chipmaker's blowout earnings reveal on Wednesday. The chipmaker ended Friday's trading session in the red, down just shy of 1%. So all three U.S. gauges recorded weekly losses, with the S&P 500 down nearly 2% and Nasdaq off near 3%. Both indexes end Thursday down session at their lowest level since September. So while stocks have seesawed, cryptocurrencies are also feeling the heat. Bitcoin sank Friday to trade as low as $82,000, deepening a slide from record high levels just more than a month ago. So it's now heading for its worst since the crypto collapse of 2022. So I think Bitcoin trades like all day, every day. It's not like the U.S. stock market, because currently, it's at 87,000. It might have been down to 82,000 on Friday, but now it's at $87,381.96 to be exact, and it's still fluctuating. So here's the thing. Meanwhile, a measure of consumer confidence from the University of Michigan showed sentiment deteriorated further in November to a reading of 51, as worries about higher prices and job losses remain top of mind. Higher prices. It's like prices of goods and services are going up, but people's salaries are not. It's not. And as AI continue to replace some people, the prices of goods and services are still going to be up. So it's like, how much money does these companies need? Doesn't matter. They charge what they want. Either you're going to buy it or you're not. So I think what's happening, or what I see happening, is there's just becoming, it's actually like a movie or a TV show, like the haves and have-nots. Either you're going to have it or you're not. It's like you're truly going to see how you're living in a world within a world. Because I remember saying this, or just looking at things differently while I was in the military. because on some military bases, not all, they're huge, they're humongous, where you have gas stations on them, you have grocery stores on base, you have like a little, you have a shopping center on, like we call the Navy Exchange, the BX, different bases have different names, but it's like a mini small Walmart where you can go in there and buy electronics, computer systems, clothes, shoes, snacks. We have a package store. We call it a package store where you can go buy your alcohol. You have schools on base, elementary, some bases, not all. Some overseas bases. You have like the schools. You have housing on base, and you also have a steady paycheck. So, say the job crisis outside of the base in the civilian sector or in the rest of the world may be affecting people, because you're in the military, you're not as affected, so you see things differently, or you may not see them at all because you're not affected by it. So it's like you're living in a world within a world. You're not as affected by things like other people. And I remember a friend telling me that. She was telling me my situation wasn't the same as hers because she was struggling at the time with, in the job market, and she was telling me how I was in the military, so I just don't understand. My pay isn't affected. I didn't lose a job. And at the time, I didn't understand, because in my opinion, I said to her, well, you chose that profession. I chose going to the military, so I don't know why you're yelling at me. But I do understand now how you could be in the world and be in totally different situations. It's like across the train tracks, there's a lot of crime. On the other side, in the nicer neighborhood, it's quiet. You don't have liquor stores. You don't have check cashing places. You don't have so many fast food restaurants. You have more police officers, or less police officers, so on and so forth. So it's going to be more and more evident, in my opinion, in the future, because it's like a movie. It's like so many movies I've seen before. But, because there is a but you don't have to be on the other side of the tracks where there's a lot of negativity, there's a lot of darkness, there's a lot of crime, there's a lot of instability. Because I actually believe that we are in a world where you are in control. You just don't realize the control that you have, because we're not educated in that way. So it's like you need to wake up, people. A lot of us need to wake up. We need to get out of debt. Debt is holding you back. Debt is holding you back. I understand everyone around you may be in debt, but you don't have to be like everyone else. Get out of debt so that you will be able to control your future a lot more. Because there's a big change coming. Well, the change is already here. A lot of people just can't see it. I don't fully see it, but I sense it. Again, with this technology, and they're talking about AI, they're talking about how the market is being affected, how there may be a bubble. So if there is a recession, think about that. If there is a recession, a lot of jobs are going to be lost. A lot of businesses will go out of business. The stock market is going to, say if it takes a 50% hit, a lot of people are going to lose a lot of money. And then maybe a year later, it's going to shoot back up and double what it once was, making the people who had money to invest rich, or stabilize their foundation, because maybe this will be this person or this family's first time ever investing, because they were prepared, they had money saved, they were out of debt, and they were investing slowly. And then when the market reset or went into recession, they were able to buy stocks and companies at a lower, discounted 50% half off price. And then a year later, it goes back to 100% to 200%. And now they're stable. And then the people with the billions and millions and trillions of dollars have even more billions, millions, and trillions of dollars. That's how it works. So most people can continue to be out there faking it, looking like there's something when they're not, looking rich when they're not, getting in all of this credit card debt just to fly all over the world, to look like something you're not, to buy these cars that are depreciating, clothes that are depreciating, trips that you would never get your money back from, that's money gone, instead of investing into yourself, learning a new skill, learning something different, learning more about what you currently do, and investing. And then while doing so, you're educating those behind you, your family, your kids, on how they too need to do the same. At least your kids. You may not be able to control other family members, like cousins, sisters, brothers, mothers and fathers, but you can teach your kids to prepare for the future. Because if you think about it, so much has changed, even from when you were a kid. Like, I knew nothing about investing when I was a child. Nada. I heard about it when I joined the military, but I didn't mess with it because I thought it was for smart people. I didn't understand it. And then when I started investing in 2020, when COVID hit, I could not believe that people made money that way. And I felt bad that I had not participated in investing so much sooner. Like, I had no idea about dividends. I'm like, what? You mean companies pay you for owning their stock? Yes. Then I started reading how people live off of their dividends in retirement because they had been investing into this company for 20, 30, 40 years because that's what their parents taught them, to where they're getting $5,000 a month from this energy stock that still pays them dividends. Then you're learning about the 4% rule, how only to take 4% from your investments from the stock market and leave the rest in there that continues to grow, like in the S&P 500 that has a 10% average each year. Over the last 50, 100 years, has had at least a 10% average. So if you're only pulling 4%, you're leaving the other 6% in there, along with the rest of the money, millions of dollars said, that may be in there, that's continuing to grow. So you're just pulling that 4%. And that 4% of that investment could be $30,000 a year. It could be $40,000 a year. It could be $150,000 a year. It could be $400,000 a year. And that may be from just one single mutual fund or ETF. Or it could just be from one stock. That's the crazy part about all of this that I learned 5 years ago, that I wish my community had known, or someone had taught me at an early age, so when I became an adult, I would not have had such an attitude, such a bad attitude towards it. Not bad attitude meaning because I didn't know anything about it, I wasn't willing to learn it when I heard about it. Because it's all about what you learn as a child. Ignorance is bliss. Because of ignorance, it makes you see things differently. Something that may be good, because of ignorance, you think it's bad, or you don't pay it any attention. Or something that's bad to do, like selling drugs or doing drugs, ignorance, you will do it because you think that is okay, because that's what people do in your neighborhood. Ignorance is bliss. All right, so I'm going to end this video because I've been talking long enough. So yeah, I was going to say something else, but this video is already too long. So I'm going to end this video. All right, so like, comment, subscribe, share this video. Let me know what you think. If you think anything at all. Even though I didn't go over stocks, right? SPYM closed out on Friday, 76 cents higher, closing out at $77.53. FTEC closed out gained 89 cents, closing at $214.32. Nvidia lost $1.76, closing out at $178.88. Nvidia has lost $30. Because the highest I believe it got up to was like 208. So that's a big, yeah. I think this is what it was a year ago, 178. I think. Anywho, Broadcom lost $6.62, closing out at $340.20. Tesla lost $3.91, closing out at $391. Remember, Tesla was over like 400 and something bucks. Tesla has taken a beat. Palantir lost 90 cents, closing out at $154.85. Palantir is taking a hit. Everybody's taking a hit. I'm still investing. I'm leaving my money there. I do plan to recalibrate, adjust, I couldn't get the word out, my portfolio next month before the end of the year or by the end of the year. Because I believe now that I think now I have too many single stocks, so I'm going to narrow that down and maybe have up to 4 ETFs. I need an international one because I don't have that, and I need another one. I may go with a REIT dividend ETF just to diversify my portfolio a little more. Yeah. Okay. Oh, disclaimer, I'm not a financial advisor, nor am I pretending to be one. Any and all information on my channel is for entertainment purposes only, so please consult with a financial advisor before you invest any of your hard-earned money. And I think this is the longest video I've done showing, but not even showing, I didn't show anything. But it just goes, well, yeah, just goes to show because I didn't do a video on Friday. I've been thinking a lot, so therefore I talked a lot in this video. And yeah, it is what it is. All right, so you guys take care. Have a blessed weekend. Love you. Peace.